Hey guys, thanks for hopping on today. I've got a good friend of mine, Kevin McGraw. We play in the same golf league together, and he is with State Farm Insurance. Today, we're going to kind of have Kevin introduce himself and then go into some of like the common questions that I get asked most often from people that I'm working with in the real estate business as the real estate dad, so to speak. I'm always getting hit with questions and advice, asking for advice on who I should hire, who I should hire to do my homeowners insurance, and should I include that in my auto insurance and to save some money, keep it at the same place, and what does homeowners insurance cover? What doesn't it cover? So I thought I'd just bring Kevin on because I know he's been in the business for a long time, just to kind of answer some of those commonly asked questions. And we'll kind of finish up with, what's going on in the insurance world today. The one question I keep getting asked more and more, why are my premiums going up so much every year? So Kevin will be able to address that. And hopefully by the end of this little podcast interview, you guys will learn a little something. So Kevin, just to start with, just kind of give us a little background. Where'd you grow up, and how long have you been in Phoenix, and what do you do for State Farm exactly?
Great. Yeah. Thanks for having me. So originally grew up in Southern California. My parents were born in Pittsburgh and they moved to the LA area about a year before I was born. So I always say I kind of hit the birth lottery by not having to grow up in Pittsburgh. And I got to grow up in Southern California back in the late 60s, early 70s when California was a whole different world. And, went to school over there, went to college, played golf athletically in school, and actually moved over here in 1992 to get in the golf business. I was originally with a company called Sun State Sports. Gentleman Brian Whitcomb, who later became the president of the PGA of America. But we designed and built golf courses. We built the 500 Club. We built Palm Valley. We built Foothills Club West. We built Western Skies. And so we did that for a number of years. We did one in Colorado. And then Brian was pretty smart at the end. He kind of saw that golf was getting oversaturated at that point. And so he kind of clipped out of designing and building. And so I was running one of the golf courses for him. Got recruited to American Golf. So I was running 14 clubs here in the Phoenix area. And, life sometimes is about timing and who you know. And one of my close friends and roommates in college, he had worked with State Farm and he'd been bugging me for years. He said, "You should check this State Farm thing out. It's pretty good." And I kept saying, "No, who wants to be a State Farm? Insurance is boring." And one time I was in Southern California, went to his office and he had some employees and he showed me some numbers. And I was like, wow, that's better than I thought, right? And so I honestly just took a blind leap of faith 19 years ago to get in this business. I left the golf industry completely and just took a leap of faith to be a business owner. And so I've been with State Farm 19 years now. We have two locations. I've got one out in the northwest side of town by Arrowhead Country Club. And then we've got one at Tatum and Bell, so in like the north central 85254 zip code area. So been a good run. There's no perfect career, no perfect job, but I've got 11 employees now. We've got a ton of experience, and having multiple locations allows us to serve more parts of the valley. We do a lot of stuff digitally, a lot of stuff on the phone. However, we still have a lot of folks that love to come to the office, especially come claim time or complicated problems. So the good news is we have that face-to-face presence. And between both offices, we're able to take care of a lot of people here in the valley, which is great.
Very cool. You had mentioned Club West. It's funny, I was just talking to somebody about Club West the other day. That's the only place I've ever had a hole in one on number 17, that
Oh, the
elevated
double
par
green?
three. Yeah, the double green.
Yeah.
And never saw it go in because it was kind of over a hill.
Yep.
And I don't know if you remember, there was a bunch of desert behind it that just
Oh,
dropped
I
off.
built it, so I remember.
So I was back there looking in the desert thinking, oh, because we could see my ball mark like 5 feet from the pin. And my wife's uncle, I was playing with him. He went and looked in the hole. He's like, "Bob, it's in the hole." And I went, "Oh my." So
Wow.
of course it was a summer day, middle of the week. So I think I had to buy beers for like three guys that happened to be in the
You
club
got lucky.
that day.
You got
That was a great course. That's sad that they let that one go. Really sad.
Yeah, it was really, it's bittersweet. Our company had sold it off, and what happened down there is it just became a water issue. So
That's what I heard.
there was a water treatment plant, and that's where we were getting our water from. And then the city of Phoenix decided to close it. And so and they just said, well, sorry, you got to figure your own water out. And I think at the end, their water bill was like 1.2, 1.3 million a year because they had to buy just regular potable water from the city. And tough to make money in the golf business back then when your water bill is that high.
Yeah, exactly. So, okay, so getting back to the insurance gig, you run basically kind of, what do they call you? Like just an agent, an independent agent with State Farm, or like a broker, or what's your title?
Yeah, good question. Depends on the day of the week what we get called, right? So come claim time, we get called their best friend, right? But really, in the State Farm system, we're all independent contractors. And so each State Farm agency is independently owned and operated. And so we have almost 20,000 agents in the company throughout the entire country. And really just being an independent contractor, all that means is I agree that I will only sell and market State Farm products or some of our alliance products. But we all are in charge of our own marketing, we're our own payroll, our own decisions, all of those things. So that's great. So we do have business ownership when it comes to that part of it. But everybody in my office, they're all licensed. They can do virtually everything I can do. The way the State Farm system works in Arizona is if you don't have your full licensing, I mean, you can only take payments and answer claims questions. You can't do anything else. You can't send ID cards. You can't make a name change. So, most agents, myself, like I won't hire anybody until they're fully licensed because they're just not able to serve our clients and provide recommendations, policy changes, all of those things that kind of go into it. So it's kind of a little niche field, but still we're here to help people and give them the best advice and get them through the good times, counsel them through the bad times, all those things that happen in our office. And I tell you, a lot of times, before I got in this business, I thought, okay, insurance is going to be boring. You come and sit in one of these offices for a week and you will see the stuff people get themselves into and all the things that happen in life. And we don't have one day that's ever the same. Every day is completely different in our offices.
I couldn't imagine. And I'm assuming you handle, all of the products from homeowners insurance to vehicle insurance to life insurance, everything, right?
Yeah, good question. So, and that was the one thing that attracted me to State Farm when I took the leap of faith. We have auto, home, life, business insurance. We have investments. We do annuities. We've partnered with U.S. banks, so we have a lending program. So that was the one thing that attracted me because we have all these different areas that we can help people and, give them recommendations on all different areas in their household, which is great. Because if I just had to do car insurance all day or home insurance all day, that would get pretty mundane, pretty stagnant. But the good news is we have the ability to help people with their retirement plans and Medicare and all of those things that we offer. And a lot of folks, because we typically the industry in State Farm, I mean, we just market typically to auto insurance and they think that's, the only thing we do. Granted, that's a big part of our business. However, it's all those different areas that we can help folks too.
Got it. Yeah. Okay, cool. Well, I've got like some questions that typically come up, and some of them, especially lately, as it pertains to increase in premiums and that sort of thing. And I think the first thing that gets asked the most, or is the most confusing, especially for people that haven't purchased a home before, is what does, a standard homeowner's insurance policy actually cover?
Great question. And we get this a lot. And it's, it's one of those things where you have to remember why home insurance was born. It was born for large, major, catastrophic losses. So back when home insurance was born, if your house caught on fire, there was a good chance it was never going to get put out. And so it was called fire insurance, right? And that's, that's what it was. And it's morphed through the years. But, a home insurance contract is never meant to be your home maintenance plan. However, we're going to cover you for the big things that are happening in life. And so here in Arizona, believe it or not, water loss is our biggest loss in Arizona because the water is so hard and it breaks down the fittings and it breaks down the pipes, right? And so now you've got, a pipe that'll burst, or we just did a refrigerator leak on the RO line and we had to get a whole new kitchen, $75,000 claim, all those things. But think water loss, obviously monsoon season. So if we have any kind of wind damage, hail damage, things like that, obviously fire and smoke damage is a big part of, things that'll happen from time to time. And then small things like vandalism, theft obviously is one that, we don't get tons and tons of thefts anymore, but we're still going to get them from time to time. So, I mean, it's going to cover a lot of the big things, but it's never going to be a home maintenance where it covers every small little thing.
Yeah, and that's where home warranty programs. I think that's where people get things confused as they hear home warranty, home insurance. They're totally different. The home warranties that buyers get when they purchase a home will cover things like, water pressure issues, your AC unit goes out, your pool pump goes out, that sort of thing. They usually don't cover roofs. Okay, if you have a roof leak, that's kind of where you guys would come in if there was like you said, a monsoon or something where a house got the roof blown off from storm damage and it rained or whatever. I'm assuming that that's covered by homeowners insurance, right? Those kind of
Yeah,
issues.
absolutely. Yeah. So if that was, a wind event or a storm event, absolutely will cover that sudden water loss
Yeah.
as a part of that. But so one thing we won't cover, and we get this question a lot, especially as we get into the monsoon seasons, is, hey, my roof leaked and I've got some water damage. Well, if it's a sudden water loss, I'm going to cover all the water damage. But let's just say your roof is old, it's in disrepair,
Right.
and it just leaked and it just needs repairs because you haven't looked at your roof in 15 years. Well, I can't get you a new roof. Now, if we can prove it was damaged by the wind or by hail, then absolutely we'll be there to assist and cover it. But if it's just some of these maintenance plans that you should have been keeping up on,
Yeah.
I can't cover that. But the water that got in that leaky roof, we'll still cover that. I know there are carriers that are starting to exclude stuff like that because they go back and say, well, as a homeowner, you should have better maintenance, and if you had maintained your roof better, it would have never leaked. But yeah, so those are some of the intricacies of the way it works.
So that's interesting. So if someone doesn't maintain their roof, are you saying that you guys cover the damage inside the house that might have been from water, or do you back up and say, whoa, time out? If you would have maintained your roof, we wouldn't even be having this discussion right now.
So we will cover that water damage, right? I'm not going to help you with a roof that's in disrepair. So we're going to help that with that sudden water loss. However, we are seeing carriers get more and more conservative. And
Yeah.
some of the things we're hearing is, hey, your roof was in disrepair, and had it not been in disrepair, you'd have never had this water loss. So we're not going to cover any of it.
Yeah.
There are some carriers now that let's say you have a pipe that leaks from a toilet or something like that. And if
Yeah.
you haven't been home for more than 10 days, meaning, hey, I went on vacation, it's August, I get out of town, I go to San Diego, I'm gone 2 weeks, and I come back. And if there's water everywhere, if you've been gone for 10 days or more, some carriers are saying, no, we're not going to cover any of that. You should have turned your water off. You should have had somebody looking at your property. So, the industry has tightened on a lot of this stuff over the last 3 to 5 years, especially.
Okay. And are you saying that, and not to put you on the spot here, but in general terms, that State Farm hasn't gone that far yet to be that restrictive as some of your other competition? When you say carriers, I'm assuming you're talking about competition to you.
Yeah, other insurance providers, right?
Yeah.
So, yes, in Arizona, we are still, every state's different. So every
Sure.
state has different laws, different insurance commissioners. So, yeah, it's not a one size fits all, right? And so in Arizona currently, we don't have any exclusions, anything like that.
Okay, that's good to know. My next question was going to be what isn't covered by my policy, and we've already kind of hit on a little bit of that. But one question that I have that's come up a few times is the old, the neighbor's tree falls on your property and crashes your fence, or even I've even seen it, fall on someone's house. These big eucalyptus trees and these windstorms or whatever. What happens in a case like that, Kevin, when someone else's tree on their property affects your property? Who's usually responsible for that?
So usually who's responsible? So if you've got a tree in my yard and it falls on your property, causes damage to you, then typically my home insurance contract is going to kick in to cover you. Now, let's say maybe they're renting a house and they don't have the right coverage, or, we do have some people time to time that don't have home insurance, then your current contract can kick in to take care of your property. Obviously, you're going to be subject to your deductible potentially and things like that. There is a process called subrogation as well. So let's say that did happen and you had to file with your current company. Well, let's say you're with State Farm, we're going to pay the damages, but then we're going to go to that homeowner and look at their insurance contract to say, okay, we just paid out $30,000 for a new roof, a new wall, whatever, and it was no fault of ours or our customers. We're going to try to get that money back if we can. And a lot of times that would be through the property owner or their insurance provider.
Got it. So would you say your advice to anyone that has any damage caused, say, by a tree or by something from a next door neighbor or whatever, tree or whatever it is, that you should file the claim with your own insurance company first and then let that insurance company go after them?
That's a really good question. I'm glad you asked that. And it's actually the opposite. I would
Okay.
say you want to go after the other insurance company first, because here's the deal. Home insurance, and we could talk about the rising premium environment and things like that. Home insurance, the combined ratio, which means how much insurance carriers are either making or losing, between all the storms in the back east, North Carolina, Georgia, all those things, what just happened in California. So, these natural events, a lot of these storms, the tornadoes that just ripped through Kentucky, right? Like, so that affects the industry as a whole. And so
Right.
what happens is when you file a claim on your home contract in any state, let's say it's Arizona, let's say you file a claim and it's a really small claim and you decide, well, gosh, it's, my deductible is 1,000, the claim's 2,000. I'm just going to pay this out of pocket. Well, legally, the claim still sits there and it still sits there on your record on your house, right? So it's going to sit there on your record on your house. Nobody knows this. Now, let's say 2 years goes by and you have that big event. You have the hailstorm, and now I got to get you a new roof and some other damage. It's a $40,000 claim. You got to file it. Well, now you got 2 claims on your record, right? And that will affect eligibility. It'll affect pricing. So that's,
Mhm.
that's how it is. So in that case, I would always say, let's try to go after the other contract first. And if that doesn't work, then I'm going to call my carrier.
Got it. Okay. So just, do the neighborly thing, go to your neighbor and say, hey, it's your tree fell on your property, but it caused damage to mine. Are you guys, I'm assuming you're going to handle this, right? And if the
Correct. Yep.
neighbor is like, that's not my problem. I'm sorry it happened, but I'm not going to do anything. Then you get your carrier involved and maybe file a claim at that point. Is that kind of?
Correct. Yeah. Because I mean, you have to think about it from that perspective. Because a deductible only applies when you're filing a claim on your property, right? If it's damage to somebody else, that homeowner, your neighbor is not going to have any out-of-pocket exposure. If it's a wind event, something like that, it's typically not going to affect their premiums or anything like that. So, and they are liable for it, right? It's their tree on their property that caused damage to your
Right.
property. So ultimately, they are liable for it, either them or their insurance company. So,
Yeah.
a lot of times people, depending on the damages, they'll go ahead and, maybe just pay for it out of pocket. Hey, we'll cut the tree down. I'll repair the fence for a couple $1,000s. And if we can go on our way, is that okay? Right? Because people are starting to realize that, hey, claims, we got to save these home claims for the big ones.
Yeah, and that's such a good point that I've only had this happen once in 25 plus years. This was about 8 years ago. I sold a home to somebody, family over in the Squaw Peak area, right at the Hyannis Peak. I'm sorry. For those of us that have been here forever.
I remember when I moved here, it was Squaw Peak. Yeah.
Yeah, it's hard to get it out of your brain. But
Right.
anyway, they bought a house that, right before closing, when they were started to get insurance quotes, they called, your typical State Farm, your big companies or whoever they were with, and they're like, sorry, we can't, this is a high, what do they call it? High risk home. The owners filed, 4 claims in the last 2 years, and one of them was, 100 and some $1,000. We can't even cover this house. So they ended up having to go to like a high risk policy with some smaller company and pay just an outrageous amount of money because the previous owners thought that their insurance policy was like a bank account, I think. So It's almost like I'm starting to hear, houses are kind of like our credit, or we're kind of like, it's like our credit report. You actually kind of get rated on
Mhm.
insurance and claims and all that. Can you kind of go into that, like how that works a little bit?
Yeah, a little bit. So, at least from a new business model, we typically at this point don't care about the previous owner and that structure. Now, if we see multiple claims, I'm sure our rates are going to be slightly higher than if that previous structure didn't have claims, because you have to look at that house. I mean, it's an asset, it's a structure, but maybe it wasn't built well when the time came, maybe it's old, maybe the plot, like there could be defects. And typically, once you see more than two claims in a short period, statistically, I mean, there's just going to be another one. That's the way it is. And that's why insurance carriers get really nervous on, we don't look at necessarily we look at frequency. We don't look at the severity, which means if you're a homeowner and you filed three small claims for, say, $10,000 a pop, that hurts you more than your house burning down one time.
Wow.
So we look at frequency, we don't look at severity, right? And so, for us, my business practice in our office is, because most homeowners, any small thing that comes up, they just call us, right? And say, hey, Kevin, my water heater leaked. I've got water in the garage. The drywall's wet. I need to file a claim.
Mhm.
So remember my talk earlier. Well, I don't hit the claim button, because the instant I file a claim, an adjuster gets assigned, even if we pay zero out, it's going to stay on that house's record, right? And so there's that. And from a real estate perspective, Bob, one of the things you do every time is when somebody's gonna sell one of those property, you have them call their insurance company and get a loss history report, right?
Right.
One
Yep.
of those requirements. Now, all of
Yeah.
a sudden, if you've got a loss in there, even if there's zero paid out, that could potentially have some buyers think, they filed a claim. So what really happened? Did they fix it? Did they not fix it? Did they not
Yeah.
get enough money? Right. So that's why in our office, we'll say, hey, I mean, obviously we're going to talk through some common sense thing. Hey, is it really bad? Is there water everywhere? And most times it's not bad. And so we have a couple contractor partners that they'll go out same day, they'll assess the damage, and they'll know within 10 minutes of being on the property, right? Kevin, this is a big one. You should start a claim. It's going to be $10,000, $15,000. Or, hey, we're going to estimate this out. It might be $2,000 or $3,000. And then I'll have an educated conversation with our client to say, hey, your deductible is $1,000, say the estimate just came in for 2,500, you can certainly file a claim. But now if you have another one in the next year, 2 years, 3 years, that's when pricing really gets affected and potentially eligibility. So we just like to have those discussions. A lot of companies will just file the claim, not necessarily understanding or even really caring about what's going to happen to the clients on the back end.
Right. No, that's so important to know.
Yeah, and in my world, because the home insurance market is, it has tightened. So if you're a new client to us, and let's say you had a claim in the last 2 years with zero paid out, that could affect your eligibility with me. Sometimes I have to say no, even if
Yeah.
even if their prior insurance company didn't pay anything.
Wow. Interesting.
So
Yeah.
yeah,
No, it makes sense. And that, I think if there's one thing for people to take from this thing that we're doing here today, it's before you just get online and file a claim with whoever your carrier is, make a phone call first and have someone walk you through the repercussions of making that decision.
correct.
Because it's not like it used to be where, 20, 30 years ago, we all had $500 deductibles and 2,500 bucks, that was a lot of money back then. And now it's
Absolutely.
like we have, 1,000, 2,500. I think our deductible on our house is actually $5,000 just to get the rate, keep the rate down. And if you have that mindset that I'm only going to do this in major catastrophic situations, which is what you should be thinking anyway when it comes to insurance, then, we'll get to that in a minute of how to get the, your rates down and that sort of thing. So, how much, when you look at coverage for a home, say you're in a home that would sell in today's market for $1 million, how much coverage should you have if you have a home of that value?
Perfect question. Get it all the time, get it all day, every day. So the reality is, and I tell our clients, I don't want to offend you. I could care less what you bought the house for. because the location has value, the land has value, maybe the schools, the view, all that stuff, right? So there's a market value, right?
Yep.
And that's what your expertise is, Bob. Like, hey, the market value is this. Well, I
Right.
only care about the structure and the improvements, right? So we always look at construction replacement cost, right? And so, because again, market value is a lot different than construction replacement cost, right? So really what that boils down to is how big is the structure? What's the construction like? What are the finishes like? Do you have, do you have high-end marble bathrooms? Do you just have basic stuff, right? So every home is actually different, right? And so we always look at construction replacement cost as how we guide what it's going to take to rebuild the structure. And so we have a tool that we use. It's updated every single month in Arizona. So it's got the pricing on all the labor, building materials, all those things. We put in all of those factors. So when a client calls us and says, hey, I'm buying a new structure, I'm buying a new home, what's the home insurance? The good news is most times now with online tools, we can see all the finishes, we can see everything, right? It used to be we had to ask all the questions. The good news is with technology now, we can rely on that just to make sure, hey, on realtor.com, are these pictures accurate, things like that. But in general, we always go on a price per square foot from a construction cost standpoint. And pre-COVID, let's just say a house in 85254 that's got some nice finishes, things like that. I mean, we used to insure them for 170 to maybe 210 a foot in that area. Now I
Okay.
don't even start a property at less than 220 a foot, unless it's really basic, built in the 80s, all original, haven't done any improvements. Then we can get away with maybe something below 200 a foot. And then obviously, depending on where you're at, let's say you're in some higher end areas like DC Ranch or Silverleaf. I mean, then you're talking $300, $400, $500, $600 a foot.
Oh, okay. So you guys can actually just look at the photos from when they purchased the home to get an idea of the level of improvements, and then and come up with a number that you think, hey, this is like the bare minimum you should do. And then it's up to the homeowner to make that a little higher if they feel like, or I mean, because I mean, gosh, it's I can tell you right now, to build any home out there is at least $300 a foot, if you know, just coming right out of the ground.
Correct. So you know that, right? And so, but a lot of people don't. They don't understand the rules of the game. And unfortunately, what we find, if they're not having that conversation, and let's say they're going with their mortgage broker because, hey, that's the cheap insurance, and now all of a sudden their home's underinsured.
Yeah.
Come claim time, whatever, these are written contracts. So whatever those numbers are on that piece of paper, if you have a claim, I mean, that is what you bought. And so you want to be crystal clear on what you're getting. And the good news is, I mean, we insure more homes than anybody in the country by far. And so we know, I mean, if we insure more, that means we got to rebuild more. So, I mean, our numbers are pretty spot on as what it's going to take to rebuild these structures. And, not to bring up California a lot, but, I know we might talk about that a little bit, but I can guarantee you all the folks over there, the ones that had these conversations, they're probably going to be fine. And the ones that didn't or didn't update their policies, if they make improvements, things like that, that's when they're going to run into a coverage situation that, you feel bad for everybody involved because, when homeowners make significant improvements, I mean, typically the last person they're going to call is us because they just don't think about that. But you always want to call your insurance provider. I mean, if you just repaint, that's not a big deal. Maybe
Right.
trade out some carpet for carpet, that's not a big deal. But hey, we gutted the bathroom and we put $40,000 into it. We redid all the kitchen counters. Those are conversations you want to have with your insurance provider.
Right. So basically, anytime you do major improvements, a major remodel on your home where you're moving walls and putting a new kitchen in, new bathroom, whatever, you wanna have that conversation with your insurance agent, but also, even if you don't do things to your home, just the market itself, I would think that every 5 years or so, you'd recommend that they reevaluate and see where the market is, right? And just what construction costs have done, because I can tell you right now that, we just looked at doing a big remodel project here on our own home, and it was almost double what I thought it was going to come in using numbers from about 6 to 8 years ago when we did a remodel. And you talk to my stepfather, who's a home builder, he said, Bob, that everything's almost double what it was 10 years ago to rebuild or remodel or do anything like that, which kind of feeds into the next question of, you know, what's going on with the market? I mean, have we kind of like interest rates where we've hit this peak now of what insurance rates are, and now it's going to flatten out, you think? Or do you think there's still room for rates to keep, premiums to keep going up based on what you're seeing in the market right now?
Yeah, good question. So, on the values of the homes, a lot of carriers we do have a slight inflation guard, which means, typically, let's say inflation goes up 3 or 4%. So if you had a house insured for $300,000 from a replacement cost this year, next year, typically it's going to go to say 312, things like that. So State Farm has that in place. A lot of carriers don't, right? And so if you insured your house 5 years ago for 300, it still might be 300, and now you're underinsured. So ours are never that. I mean, sometimes they're that far off if there's been improvements, but we do have an inflation guard that's built in from that perspective. As far as the rates go, we have seen. I've been doing this, almost 20 years. In the last few premium cycles, I mean, we've just seen some rate adjustments up, right? From a State Farm perspective, we just had a statewide meeting and we've got the rate that we need. Our trends look good in Arizona. And the good news is, I know folks ask me all the time, hey, is California affecting us, especially as a State Farm client? The simple thing is, real quick, State Farm peeled off California years ago. They call it State Farm General. It's its own company. It's still State Farm backed, all those things, but what happens in California stays in California. Same with Florida. We peeled Florida off into its own company because, we got some smart people in our building that know, okay, California's regulatory environment and the way they do business didn't allow us to charge the right price. And so that's why the problems exist over there. And so knowing that, our company was smart enough to say, hey, when there's going to be large events, because it's not an if really anywhere, it's a when, right? When's it going to happen and how large is it going to be? Unfortunately, they've had some very significant large events over the last several years that, could have affected the rest of the company, but we peeled that California off to its own. So, but from that perspective, it's hard to say what the long term looks like because, the weather patterns are changing slightly. Some of the storms in certain areas are getting worse. And so, a lot of it just kind of depends on what happens claims wise, really.
Yeah, that's interesting because I think that's kind of the assumption that so many people make is, oh, our rates are going up because of those idiots in California that didn't trim their, whatever
Right.
trees back and forest didn't, whatever. And but what you're saying is as State Farm at least, keeps those kind of higher risk areas kind of in their own little world or even drops them in some cases if it doesn't make business sense to continue insuring in those areas, which is good to know because Arizona, I mean, we've got our share of fires, forest fires, but you don't hear about like homes in Phoenix burning down like you saw in Southern California recently.
Right. Yeah, for sure. So, and that's just unfortunately the nature of the beast over there and some other, high propensity. I mean, you think Florida and some areas of the Gulf Coast and New Jersey, right? There's just a lot of, a lot of probability that something's going to happen, right? And so
Right.
I was in a State Farm meeting years ago and our algorithms and our models predicted Superstorm Sandy. I mean, we missed it by 14 months, but we predicted almost exactly where it was going to hit, the exact damage. And so, knowing that, we started restricting new business and doing things to mitigate the loss. And so, same thing happened in California in 23. We started not offering any new home contracts and business contracts. And then we started non-renewing some of the highest risk areas. And that was really because California wouldn't allow us to charge the right price or anybody in the industry. And so, we can't, we're going to pay out over $9 billion in California. Think about how many companies that would just take down and they would go under, right?
Oh,
So
yeah.
it's, you can't, we will never collect $9 billion in premiums to make up for that. It'll take a long time for us to make that loss up.
Yeah. Are you hearing about insurance companies that, I mean, this thing's still kind of filtering through and settling out, but are you hearing about, and you don't have to name who they are specifically, but other companies that are like, there's no way they're going to make it out of this thing alive?
Yeah, there will be some smaller companies that won't make it out, and even the state fair plan. So if you can't get insurance in California, you can go to the state fair plan, super expensive, but they're already out of money. And the problem with that is what happens is on the fair plan, depending on what your market share is, so State Farm has a 20% market share. I think they said they're going to need $1 billion to get through this loss. So State Farm's going to have to cut a check for $200 million to the states for the state insurance run program. So let's turn our faces over to Arizona here, because California, thank God we're not there.
No kidding. No kidding. Well, I mean, I'm sure there's going to be a lot of people saying, okay, I've finally had enough. I need to get out of here, which
Yeah,
that's
exactly.
been going on for a long time in that state. So I guess the last question that I have for you that comes up a lot is just in discussion is with rates going up, obviously premiums going up and that sort of thing. What are some ways that folks can lower their insurance premium? What kind of advice are you giving them there to where they can get that not lowered, but at least to flatten out so it's not as painful right now?
Yeah, exactly. So, a few things. I'll talk about your home first, right? And so, and I'm really speaking to State Farm. I don't know what some of the other carriers, but a few things. Like if you've updated your roof and replaced your roof in the last 5 years and you have documentation, you call us. That's going to help your rating models. And not a lot of homeowners have done this. If
Yeah, I've
you've
never
redone
heard
the
that before.
wiring and redone the plumbing, we're going to give you a better rating model on that, because hey, new wiring and new plumbing is a lot better than wiring and plumbing that's 30, 40 years old.
Right.
If you have a home alarm system, don't run out and buy one and spend $40 a month. It's going to save you a little bit. So all those little things you can do to protect your structure and maintain it, helps. Obviously, from a multi-policy standpoint, 99% of the time it makes sense to have all your stuff with one carrier, because we give you a discount on your autos if you have your home. If you have your home with us, we give you a discount on your autos, vice versa. So, when they call it bundling, right? Putting everything together with one carrier, typically from a cost perspective, gives you the biggest discounts and allows that premium to remain stable. Plus, if something happens, you don't have to worry, okay, do I call company A or company B? I can just call Kevin, whatever that looks like. So those are some of the things. You can entertain higher deductibles too, right? So, you got to remember, like my advice to our clients is you always want to transfer a large loss to an insurance company, right? You can handle the small stuff, right? So if somebody breaks in and steals $2,000 or $3,000 worth of stuff, well, yeah, that's no fun. I get it. But you don't want to use me for that. So maybe you have a $5,000 deductible, just knowing that, okay, all the small stuff, I'm going to take care of that.
Yeah.
I'm just worried about, a little house fire that now has smoke damage, and now we've got to take out all the furniture, clean it, a lot of the drywall, cabinets, and it's a $100,000 claim just like that. Or the water loss that now we've got to rip out all your drywall and all your flooring, right? So, so some of those things are what we try to educate our clients on is it's okay to have a slightly higher deductible, and maybe you're going to save $200 a year, because the average homeowner in Arizona only files a claim about every 17 years. So
Wow.
statistically, I mean, and I don't know what the statistics are and how long people stay in their homes in Arizona, but statistically, then you could argue, man, there's a good chance you might not ever file a claim. So why not have a potentially higher deductible?
And knock on wood, you're not going to believe this. And I know I shouldn't be saying this because now
Don't do it.
I'm going to gooch myself, but we've been married 33 years. So we've owned homes for 33 years, have never filed a homeowner's claim in 33 years. And get this, have never filed an auto claim in 33 years, with two daughters that are now 30 and 23 years old that drove cars from the time they were 16. What are the odds of that?
I don't know. I could probably have one of my tech guys go through my book of business and try to find you. And I don't think I have one Herzog family in my entire book of business. So you are the unicorn, my man.
You know what? We've been with my wife's father's retired military. So we've been with USAA for 33 years. And I will share this with you, Kev, that for years, I remember, 20, 30 years ago, we'd get calls from insurance people. Hey, let us give you a quote. And I tell them, well, we're with USAA. They used to say, never mind. Now I'm hearing people that have actually found better deals out there through companies like State Farm and Farmers and some of the big ones that are competitive with USAA again. Or maybe that's because USAA is charging more. I don't know. But it's interesting how that's turned a little bit. They're not the the saint that they used to be, where people are just like, oh, literally, I had guys tell me, oh, if you're with them, I'm not even going to bother. That's changed.
Yeah, when I first started the business, if you had USAA, I would say, hey, we can go through the motions, but if price is your biggest concern, there's a high likelihood I'm not even be able to touch their price, right? But that has changed. I'm not sure why. I don't follow them specifically. We have tools and we can pull up every carrier's rates in Arizona, or at least their rate filings, to see what they're doing. But I know when we have a client now that's with USAA, my new sales team, their ears perk up a little bit, because they're like, okay, now we have a high likelihood from a pricing perspective to get the deal, right? But you got to remember too, though, is price is just one factor, right? And
yes, that's right.
Price is one element of it. And USAA, I tell clients all the time, like, USAA is a great company. If you have a claim, they're going to take care of you. Good training on their customer service, things like that, right? But cheaper isn't better, better isn't cheaper, but better is always better, right? That's my philosophy. And so, sometimes if the market is in this area and somebody's priced down there, there's got to be a reason why.
That's right.
There's got to be a reason why.
Right.
So
price is only an issue in the absence of value. Sometimes
I say that all the time, right?
So and the other thing I like that I don't like about the really big, there's something to be said for having one person to turn to, right? Like if you have a problem and you're like, should I file a claim or not? This happened this week. What do you think? It's nice to be able to pick up the phone and call Kevin and say, Kevin, I trust you. You're going to give me good advice one-on-one. What do you think here? Versus, oh, just go to our app online and type in your information, or go in the little chat box where you're talking to some $20 an hour employee in Indonesia or something that's giving you advice on your insurance. So, that's kind of a good place to kind of wrap up here is what are the advantages of using someone where you have that go-to one person contact for all your insurance needs versus, these bigger companies, you just pick up the phone, who knows who you're going to get on the phone.
Yeah, so and therein lies the challenge, right? Because most people don't envision getting in a bad auto accident. They don't envision something really bad happening to their home. And so in our insurance industry, we've done it to ourselves. For a long time, we made it about price. Hey, just get the best price, right? But I tell clients all the time, in this business, when you need me, you really need me.
Yeah.
When you have a house fire, when you got into a horrific car accident, you're injured and you don't know what to do. In this business, like when you need us, you really need us, right? And so we have all the technology, we have the apps, you can do stuff online, you can do whatever, 24/7, but when it comes claim time or a big problem or whatever that looks like, I mean, that's why our clients are with us. We're never going to be the least expensive. We're never going to be the most expensive, but they're with us knowing that, hey, Kevin's got 11 people. When I call up, Brittany's going to answer the phone every time. And Brenda's been the office manager 16 years. So you get that consistency from that perspective. Plus, State Farm, and we've got a hub down in Tempe, right? And we've got those buildings right across from ASU Stadium, right? And so we've got team managers, VPs, and I've gotten to know those folks through the years. And so now, let's say I do have a claim, and not every claim is going to go perfect. Sometimes an adjuster will make a bad decision, somebody will forget to call, right? Like business is business, mistakes happen. But when you have somebody that's local, when you have somebody you can walk into the office or pick up the phone, that's my job then, is to be your advocate to get this thing fixed as quick as possible, right? Even small things like, everybody on this podcast has had a new windshield probably in the last 2 or 3 years, right? And so You give me a call, I've got 3 vendors, they'll come right to you. And let's just say that install doesn't go perfect. Well, you don't have to call the 800 number. You call us and we get that company back out. We fix the problem just like that, as opposed to having to repeat the wheel and call the 800 number, repeat yourself 3 times, maybe sit on hold for 20 minutes. Who knows if they're going to call you back.
Yeah,
And there's the value of being with somebody that's got a local presence.
exactly, man. Exactly. Right on. Right
So,
on. Cool. All right. Well, I mean, gosh, you answered a lot of questions in a short amount of time. I really appreciate your knowledge and answering some of these questions that come up between myself and my clients. What we'll do is, down in the comments section on YouTube here, we'll have all of your contact information. And for my folks that are out there that have been clients of mine forever, hopefully you're able to get something out of this. It's time definitely to go back and make sure that all your coverage is where it needs to be. Go through your house and make repairs and maintain things. I'm looking right now at, I hear horror stories about the little angle stops on toilets and the valves for washing machine. Those things only let go when you're out of town. And
yeah,
that's when they
exactly.
cause the most damage. And my plumber was here the other day replacing a laundry sink of ours. And I had him go through and look at all of our angle stops. He said, Bob, these angle stops are all 20 to 30 years old. He said it'll cost you, $1,000 to replace them all in your house and all those valves. He said, but if one of them goes, I mean, you're talking tens of thousands of dollars of damage and a claim and everything else. So I'm actually getting ready to go and replace all of our angle stops in our house, just because I'm sure you can attest to that's when you talk water damage in Arizona, it's usually not from the sky. It's usually from something inside the house doing it, right?
Yeah, absolutely. That's our number one loss, is water loss, and it always comes from, not always, but 9 times out of 10, it comes from the interior, right? And so,
Yeah.
yeah, you just want to be diligent with that. And then the last thing, Bob, I'll say real quick on the home contract is, from a personal property standpoint,
Yeah.
your home covers, your structure and then your possessions, right? And so, it's our job to always get you as much money if and when you need it the most. It's your job, though, to have an understanding of the possessions you have. So think that somebody gets into your house and steals a bunch of stuff. Well, an insurance company isn't going to just open up a checking account and start cutting checks. We're going to say, hey, give us a list of all the stuff that just got stolen or went up in that fire. So it's always a good idea we used to give you log books and say, hey, write everything down. And nobody would do that because it took too much time. But in this day and age with these guys with cell phones, right, I
Yeah.
recommend everybody walk around, snap some photos, do some deals, right, to make sure you understand what you have. And then lastly, with your personal possessions, every single carrier will limit certain things. Every carrier is going to limit jewelry. So if you have a lot of jewelry, you need to schedule that out. If you have a lot of firearms, you need to schedule that out. If you have a lot of artwork and things like that, you want to at least schedule it out, or at least know your risk, right? If you have $20,000 worth of jewelry and the cap on an insurance contract is $1,500, well, if you know the rules of the game and you don't decide to protect it, that's okay. But it's
Yeah.
never a fun conversation if and when that happens. And now your insurance company says, oh, right here, we limit to 1,500. Sorry, you're out the 18.5. Those conversations aren't fun. So insurance is one of those things you buy it, you put in a drawer. You typically don't use it very often, if ever at all. And so you just don't think about it. But once every so often, it's good just to hit the reset button, look at it, and just figure out, okay, do I know what all these numbers even mean?
Right. That's a great point. And years ago, I was told that by my financial advisor that my wife has some jewelry, and we ended up, it's still to this day, have a policy that's, they don't call it an umbrella policy. What do they call that? Like a separate policy
Yeah,
from,
like we call it a personal articles policy. Sometimes they're
okay.
called floaters, right? You hear riders, stuff like that. But the
Yeah.
deal is, I mean, those items are never scheduled out on a standard home contract. You've got to be the one. And in our office, we're going to ask the question: tell me about your jewelry, tell me about your firearms, right? But a lot of carriers won't, especially the ones that are just focused on price.
Right. Kevin, one last question as it pertains to that. If someone does have a large amount of jewelry or guns or art or something like that, and they want to create that policy, personal possessions policy, whatever. Do you guys require that they go get all this stuff appraised, or are you just going off of what the consumer tells you at that point?
So we just changed our rating model. So we will go up to $10,000 without an appraisal, right? But we're going to
Okay.
need good details, good descriptions, if you have receipts, stuff like that. Now, I always educate our clients, if you've got some good pieces, you want to know what that market value is, because whatever's listed on that policy, that's the most I can pay you. So let's say, this just happened to, a mutual friend that you and I have had a Rolex insured, didn't really look at all the prices. Watch got stolen, and now he's trying to replace that watch for what he had it insured for. Can't find it. Not going to happen. It's going to be probably a $10,000 hit if he wants to replace it with that same watch, because sometimes those items go up in value, right? So you just always want to look at that every so often, just to make sure that, it's scheduled out the right way.
Got it. And I'm assuming that you have connections to people that can appraise things like that for art or
Yeah,
jewelry.
I've got jewelers in the North Valley, the West Valley, and down in Ahwatukee. So kind of the
Do,
three.
do, do those guys usually charge to do appraisals?
They will charge, but for us, they give a highly discounted rate, because
Okay.
hey, you go in the store, you get a good appraisal. Who knows? You might see some diamonds, and next thing
Yeah,
you're dropping $4,000 on a $50 appraisal.
right. So just don't ever take your wife when you go get that appraisal
Yeah,
done.
yeah, go alone, and yeah, right, exactly. Go in the morning on a Monday when you're not in the best mood, right?
Yeah, yeah, exactly. All right, cool. All right, man. Well, hey, I appreciate you taking so much time today to go over all this with us. It's been very educational. Guys, if you're looking for a super honest guy that's gonna treat you like one of his kids, like I treat my clients, as the real estate dad, so to speak. I think Kevin's like the insurance dad. If he told me I needed to get X amount of coverage, I would believe him. He hasn't been in business for 19 years by screwing people over. So, give Kevin a call, have him look at what you've got going on. I know that now that we talked a little bit about USAA, I'm going to have him look at my stuff and see if there's somewhere that we could be saving some money and get an even higher level of service. That's, to me, that's what it's all about. The old price is only an issue in the absence of value. And Kevin's a great guy to talk to about your insurance needs. So Kevin, thanks again, man. I appreciate it. And I'll plan on seeing you on the golf course this Sunday.
Let's hope so. Thanks for having me. And if anybody has any questions, please don't hesitate to reach out.
Right on. Thanks, buddy.
Thanks, pal.